We'll close that. Um, okay, guys. While everybody is shuffling in, I'll just kind of go ahead and start here. I want to thank Rick for joining us again, and going over a lot of things in the market that I think are super, super important for you, as not just as option traders, but as traders. It's really important to have a good handle on things. And one thing's for sure, I have my style. I have my style of trading. Scott has his style of trading. Some things, and Rick has his as well, but there are some common denominators in all of them. And one is you need to identify some kind of trend so that you know which way the market's going, which way are the institutions trading. Are they selling into strength, or are they buying weaknesses, things like that. And the way I see it, after that, it's all just kind of individual nuance where, Rick, you've got your style, which you've been explaining in the last couple of weeks, and I've got my style, and then Scotty has his. So it's just important as traders to understand that there are different styles. And frankly, the only thing that really matters is, are you making money? And if you're not making money, then there's either something wrong with the style or the process that you have. There could be something wrong with the market, to which happens, where your style, your process that works really well stops working. And at that point, and this doesn't mean you're late to the party, but at that point, when your process stops working, that's actually like an indicator on your monitor, on your screen, where it starts tailing off. It starts trading lower, as far as the trades that you're able to make, and make profitably. So again, the first thing is, it could be something wrong with your process. It's not a good process. Second, it could be the market. But third, and this is, in my view, the most important, after you have the first two as prerequisites, there could just be something wrong with you. And at times, I've certainly dealt with that. I've dealt with that a lot early in my career, where I was the guy that I always keep preaching to you not to be, the "this time is different" guy, and basically injecting hope into my trading strategy rather than objectivity and experience. And so it's really important for you to have all three. But again, I can almost reverse engineer it, or reverse the order, and say, you got to have your mind right first and make sure you're trading for the right reasons. And the right reasons are frankly to be a bit of a mercenary. Like, I just want to make money. And the way you make money in this is, again, to develop a process that works, and then just stick to it fiercely. So, Rick, you got any comments on that? Am I full of crap?
No, absolutely. The objective of, referring to different strategies and different processes, the objective is to make money, but also to understand protecting your money, protecting the money that you've made. So when your system, like you refer to, stops working,
Hmm.
it could be just a change in the market dynamics. And you have to remember it's time to protect your money. It's not always a money-making market. And sometimes it's, unless you're a bear, right? I'm a bull, as you can see, I got the bull
Yeah.
behind me. So I typically only make money in my bull markets because I'm always looking for bull trends. And once the market reverses and we're in a bear trend, or we're in a consolidation trend, I'm in a protective mode versus, okay, now I'm looking for bear trades.
Right.
I like to look where the supports are going to establish and then look for my type of system to work again. So talking about, if your system stops working, you have to think about, well, what do you do now when the system stops working? And that's
Yeah.
getting protective. I like to talk to people about protecting your higher low, right? So if you think about the market is in a trend, it's in an uptrend, and it's making higher lows and higher highs. If you look at your individual P&L, it should have some resemblance to what you're trading. So if you're trading micro strategy right now and you look at your P&L and you look at it like from a line chart, it should be pretty significant along those lines. But you have to also remember, okay, get back to a healthy mindset and understand that's not going to remain the trend forever. So where's your higher low? Where's the number you're willing to come back to?
Right.
Because in our process, if we make, let's just throw out a number. If you made 100,000 in MicroStrategy and then it loses its trend and you're down to, hey, I'm up 70,000 now, but your mindset is thinking I'm down 30,000. You can't think like that. You have to always establish where was the number you were going to be happy protecting yourself, because inevitably when these trends end, you're going to give back. So where's that higher low that you want to get protective? And that's my mindset of, hey, my system's not working. That means the trends have changed. Where's the number I'm going to protect and be happy, and then wait for this market to give us more signs that now we're resuming our uptrend. So very important, to your point, is have your system, understand that there's different trading styles, find what your trading style is, and then have your fail-safe programs for when those trading styles stop working. My system did not work in 2021. So in 2021, when we entered the bear market, my system didn't work because none of my golden pockets were holding, none of our demand zones were holding. So it constantly kept on telling me, you don't have trades to take. You have money to protect instead. So very important for traders to understand this. You can't just be looking for, okay, what's the next trade? What's the strategy I should use? It's understanding that as a trader, your objective is also to protect your money.
Yeah, you raised a couple of good points. And the first one I've talked about before, but not as much as I should, particularly in big bull markets like this. Like you look what's happening with Bitcoin and MicroStrategy, and some of these other stocks. And yeah, your portfolio value, your account value really, really starts expanding if you're long and you can be really aggressive. But you got to treat your balance, your account liquidity as a chart, like a chart. And where's the high? How much it's like a trailing stop, basically. And I have mine and I've hit it a few times recently where I'm thinking, okay, I've had this pullback in my account. That's it. Like I'm not willing to risk more than that. I'm not willing to take a bigger drawdown in my account. And so I will really, really I may not, I don't necessarily need to liquidate everything. I mean, if I've got if I've got one trade that's working, I'll stick with that trade. I'm not a robot, but I will really, really cut back on my positions, make sure that I'm not falling below that level. And what that does is it gives me cash on the sidelines. It gives me some objectivity because I'm not in some trade that's not working and I'm kind of fretting about it and wondering man, I'm losing a lot of money. Keeping an eye on my account balance takes that out of the mix because it gives me literally a floor. Like I can't go below that. And that always leaves me in a position to win. Like
Yeah.
let's say your account goes down by 5%. Okay, then you have to bump your account back up by 5.5% just to get back to even. That's totally doable. But if your account falls 20%, now you've got to make 25% just to get back to even. And it takes a long time on the x-axis on the chart. It takes a long time to get up there again. But one of the things that I tell people, not individually, but just as a group, hey, if you're crappy enough to lose that much money, what makes you think that you're going to magically become good enough to make even more of it back? And so protecting the account balance is a really, really important thing. It's a real important thing that you have to be mindful of, because if you're not, you're going to make good money in bull markets, but then when there's a bear market or when there's a big correction, you're going to give it all back, and that totally wipes out not just your account but your self-confidence. And if you don't have self-confidence, you're not going to be able to trade well. At least that's the way I look at it. So
Yeah, and to that point, you also have to recognize that when you do get protective and you do say, "Hey, we're going to stop out. I'm not comfortable with this correction that's currently happening," but you're wrong, right? You are wrong. It was like, "Oh no, I should have held. I should." Don't be scared to buy back in higher. Once we have reassurance and we have a new support that's been built, you might have stopped out on MicroStrategy 10
Hmm.
times along the way. But if you kept on buying back in, yeah, in the long run, it would have been better just to hold the entire time. But if you kept on buying back in, you kept on making money, right? You kept on making money. So what I like to tell people is, yeah, you got to get protective. You got to protect your higher low, and
Hmm.
you absolutely are going to be wrong, right? I mean, at
Hmm.
the end of the day, we can't predict every single movement in the market or in an individual stock. But once you stopped out and you stopped out at $10 and now it's trading at $12, you're like, well, I stopped out at 10, it's at 12. Who cares? Is it going to 14 now? Is it going to 15? Does it look like it's established a new support? Is it breaking up? Just move on. At the
Yeah.
end of the day, if you find yourself creating a good habit of always protecting your money and taking good trades, down the road, it's going to work out. Hope, fear, greed, and regret, you're always going to have them. You're going to regret that you sold. You're going to regret that you didn't buy back in. Just constantly look for protecting your gains and looking for new great opportunities, even if it means buying back in higher. Don't be scared to buy back in higher.
That's a really good point. That's a really good point. If I was in hindsight, all the big stocks that you owned, it's in hindsight, it's always easy to say, you know what, I should have bought more, or I definitely should have stayed in. Um, and that's it. And you're always looking back, and then you're looking at the money that you're making, and it doesn't seem like as much. It seems like you've really screwed up the trade. But Rick, I think what you're talking about is managing your risk as opposed to being right. Oh, I sold it up here. Now I'm buying it up higher, so I'm wrong. I was wrong in selling. And now I'm afraid that I'm going to be wrong in buying it back, as opposed to just saying, like, look, I took some off the table because I perceived a certain amount of risk, and that risk could have been, I thought it was going to pull back a lot and I didn't want to hold it, or I wanted to take profits, whatever the case may be. And then if you look at the stock and it presents a better opportunity, another good opportunity, take that as a different trade. Think about that as just the next trade on a stock that you're familiar with. And so that'll keep you from, and I've seen a lot of traders do this. They don't buy back in because now they think the stock's too high. Oh, it's gone too much. I can't buy in. And a lot of times a stock that goes too high continues to go too high for quite a while without you, because you're waiting for the big pullback. And then one last thing, and then Rick, I want you to take the screen and do what you want to do. But one thing to keep in mind, if you're waiting for this big pullback before you buy, I guarantee you're not going to buy it when it pulls back a lot, because you're going to say, well, something's wrong. Something's wrong with the stock. And then perhaps the stock runs up again without you, or perhaps it keeps falling and you go like, look, I'm glad I didn't buy back in. But wouldn't have been better off just to ride the trend to begin with and let the stock kind of take you out, or the option, whatever you're trading, let that kind of take you out of the trade, or you scale out a little bit at a time, as opposed to just deciding this is the top, I'm going to sell. Because whenever you sell, the underlying assumption is I'm picking the top. Because if you weren't, then you would just hold the position. So there's a lot of things that go into this stuff, but if you really stop and break it down, they're actually not a lot. They're just a few real essential things that you have to know. So anyway, as Forrest Gump would say, that's all I have to say about that.
I mean, this is a great example of what you're referring to. This MicroStrategy chart. I've spoken to a lot of traders, and there's a lot of regret out there regarding this chart. And it really comes down to having a system and understanding what you should be looking for. So when we were talking about you're giving back, you got to be protective, protecting your higher low. Don't be scared to buy back in and higher. If you're trading MicroStrategy right now, your P&L should resemble something along these lines. So if we looked at your
Mhm.
P&L, maybe you had a base, so you weren't making money for a few months, and now your account's taking off. So for me, I'm fortunate enough right now. I'm going to share this result. My MSTX position is up 633% today, and so forget about the dollar value. I'm thinking about the percent because we all have different size accounts. The reason why I'm able to hold this up 633% is because it's following my system and it hasn't given me a reason to sell. However, I might have to sell this at 400%. I might have to sell this at 450 because I'm not trying to pin the top, but I am allowing the chart to mature until it gives me the clear signal that it's done, that it's time to sell. So if I look at this right now, I would say I'm not going to time the top. So I know I'm going to give back. Where is the amount that I'm willing to give back? And if I looked at this chart and I said, okay, we had zone to zone trading, we had a golden pocket entry, and all we've had since the move started to break out, like, I wasn't really up much here, but I got a higher low, I got higher lows, I got a higher low in here, explosion, higher low in here. It's constantly just making higher lows and pushing up higher. So my account that is tracking this trade right now is doing the same thing. It's doing the same thing, right? So for me, understanding I want to protect my gains, well, my gains that I'm trying to protect keep on moving up. So where do I want to protect my gains right now? I want to protect it right here. So I understand that's a significant pullback. However, because I've followed this strategy and I've allowed the trend, that's 22%, 23%. On MSTX, it's going to be close to 50% before I stop out. And then it may trade higher afterwards, but I got to understand I've allowed it to develop. It's given me a really strong trend and it hasn't lost its trend the entire time. So you will see traders that, they'll sell because there's a dark cloud cover. They'll sell because this was an evening star candlestick, almost a bearish man, maybe, but we didn't get. Yeah, there was not a space. And then here we go. You're constantly moving up higher. But for me, thinking about that theory, thinking about protecting my higher low, I understand if I want to make money, I have to be able to sit through a trend and allow the chart to develop and understand I'm not going to time the top. 20% pullback, 17% pullback, there's an 8% pullback on this day, but we have momentum. And I talked about this a couple of weeks ago or last week or the week before. I could still see us trading higher. And I think it was after one of these candles last week. I can't remember which video it was, but I said I could still see this trading higher and I related it to the GameStop of this current market. Till we see something that looks like a significant volume climax blow off top. And I haven't seen that yet. So we did see a little bit of escalation in volume in here on this candlestick, but this escalation in volume in here was not a blow off top because it was a bull kicker candlestick. It wasn't we gapped and we saw a shooting star, or we saw an evening star, a doji candlestick, or a shooting star. It was just basically a bull kicker. So this is still not giving me concern that this chart is topping. Now,
And Rick,
yeah,
explain, if you don't mind, because some people may not know this, like what's a shooting star? What's that type of thing. So I know what it is. I know what it is, but I think some of these people don't. So let's hear it in Rick
yes.
DaCosta's language.
So we want to understand what candles should signify, right? So, basically that's a wick, and then we have the body down in here. So what this would signify is if we were in a trend and, the candles were coming up into this point, and then it escalates that day up into this range after the open. So what'll happen is we'll open here, we'll open here, what either or, still shooting star, and then we'll push. And while we push, everybody's feeling great. Oh my gosh, look how much MicroStrategy's up today. We're making so much money. You're texting your friends and your family, great. And all of a sudden, boom, all the sell pressure happens and you get all this selling. So once all that selling starts to happen, you create a lot of bag holders, you create a lot of resistance, you create a lot of people that are stuck in bad positions. And it also signifies there was no more buyers in here, there was only sellers. Pushed up, ran out of buyers, sellers sold into it, and now we close low. This would be a red flag candle. This would signify, well, buying exhaustion has now happened. So typically what we would look for after this is a candlestick that would either print us like a bear kicker candlestick where we'll push down from here, or it'll fake out and we'll push back up a little bit and then have that a hard sell because we can't break through here and we run out of buyers. And once everybody recognizes we run out of buyers, they become sellers because they want to protect their gains. So that's a shooting star candlestick. And this is something we would look at, at the top of a trend to cause some concerns.
Okay. And we're not seeing that.
Well, we're not really seeing that. We are seeing a couple of red flag candlesticks that have come up that do give me a pause for concern when I look at this chart, and they've happened along the way. But we still have to remember everything we look for in the market from a technical analysis perspective needs confirmation. You cannot use one candlestick and say, well, that's it. Now we're going to see, this market's only going down from here, or that's a top, or that's a bottom. Everything needs confirmation. So when I looked at this candlestick in here, I said, well, that's a dark cloud cover. So a dark cloud cover candlestick, actually, did it give us a dark cloud cover? Let me just double check this in here. So a dark cloud cover should see a candlestick that covers 50% of the previous candle. So it was just shy of the true definition. So 50% of this green candlestick, had it been covered by the next day's candle, let's zoom in here so you guys can see this clear. So if we look at this candlestick in here, and we think the next day we see that's the halfway mark, and the next day we see a candlestick that pushed up higher, but then closes below. Where is my tool? Okay, here we go. Right there. That's a red flag candlestick because it's essentially a dark cloud cover. It's essentially the same theory as the shooting star, because what happened was we opened up higher, we gapped up, but we sold into it. And if we were to, if we had to have seen a full retracement of that previous day's candlestick, so if this extended lower down in here, let's just change the color here and just make this red, right? And we saw this the whole day, basically an extension of that candlestick, then it would be a bearish engulfing candlestick. So that's a red flag. Bearish engulfing candlestick, dark cloud covers, shooting stars at the top of the trend. They give you the red flags that, oh, this trend's potentially selling because we ran out of buyers. But we have to remember, going back to one of the things I originally talked about was understanding momentum and using the ADMA on a trend to hold you into a trade, because it's going to hold traders into a trade, because the ADMA is the T line. That's the trade line. Anything that is trading trend above the ADMA means the trend has not been lost. So yes, we get a red flag, dark cloud cover. Next day, higher open, sold into. Basically, we're looking at a dark cloud cover now with two candlesticks back to back. So now I'm thinking, this loses the ADMA. We lose our higher low in here. This chart's in trouble. However, what was happening at that time, using your theory, using your system, was we were backtesting. We had this resistance and this backtest. One backtest, two backtest hold, ADMA holds. We don't lose the higher low that we just currently set up. Great. We could have lost all this. That would have killed this short-term momentum, but it still would have been fine for the chart. We could have retraced and made a higher low on the weekly above 116. That's great. But what this was signifying, that we were still in a strong trend holding the ADMA. So we have to look for these red flag candles. We got an evening star in here. We did lose the ADMA. We pushed up higher. We had some bearish divergence. Strong momentum. Bull kicker candlestick. Huge momentum. So again, this is a red flag. Yes, we've lost the ADMA. Where's the volume? There's not a lot of sell pressure currently happening. So yes, we were a little bit too far extended. Remember, we get too far extended, we have to pull back. We still made a very strong, healthy higher low, and the trend continues. So a chart like this, because of the momentum that we're seeing, even right now, minor bearish divergence, there's monthlies exploding, weekly, no bearish divergence. We're extending so far from the ADMA. This is telling me, be prepared for a big explosion, then that type of GME candle. Let's go look at what GME saw when it's topped. That's what I'm looking for. It doesn't need to relate to that much.
One.
It doesn't need to be that extended, but I'm looking for something that says, there you go. Now anticipate a few months of consolidation. That's what I'm going to anticipate in MicroStrategy, is a few months of consolidation once this tops out, because look at the monthly, right? You're looking at this complete explosion. The weekly getting very far attached from the ADMA. If you look at the weekly Bollinger Bands, because I know the community likes Bollinger Bands, you're outside the upper Bollinger Band. So you're actually
Yeah.
detached from it right now. So you look at the line chart, you look at where the upper Bollinger Band is. We're basically 2 or 3 standard deviations away from the upper Bollinger Band. So you know there's a great momentum, but be prepared. It's getting ready for its give back, right? It's getting ready. And when it does, just understand where your higher low is and how much you're willing to give back. I had a few targets on this chart. Here was my target 1, target 2, target 3. Well, we're going to different targets. And right now, can we get to the 504? We could get there tomorrow. We could get there.
Hmm.
It sounds crazy that we would do something, but I just showed you an example of what GameStop did, right? That's just 20% to get to 504.
Yeah.
I'm anticipating that we'll get that blow off candlestick. It's going to take months of consolidation. Yes, MicroStrategy could get to 1,000. It could get to much higher prices. But of course, once we escalate too much, we will see a blow off top eventually. We will consolidate. And then later on, we'll think about pushing up higher. So I'm just talking about master here because it was the dialogue that we were referring to, right?
Yeah.
And
Yeah.
protecting your high low.
But
Don't be
you think about it, you had mentioned it could get up to excuse me, like 505, I think you mentioned. It's up over 8% just today.
yeah,
So if somebody's thinking, wow, it can't go up another 20%. If it's a blow off top, I think 20% is doable, maybe even more. So you have to wait for the day or for that time where you're just going like, oh crap, I'm a god. This is awesome.
yeah,
That's probably the top.
yes. Anything that I've been a part of along my trading journey that's been a blow off top, I'm getting friends and families giving me those morning text messages of euphoria signs. And I start to get that little bit of concern. Okay, when everyone's looking in one direction, be prepared that we're going to see that
I
opposite.
just quit my job.
Yes. Yes. So, and also if you're, relating it to the indices, relating it to what's causing the move, you look at MicroStrategy right now, and there's been some 20% pullbacks, but throughout that process, if you were relating it back to the Bitcoin chart and you look at the Bitcoin chart here, no sign of a top, right? There's no signs of topping.
Right.
We had a double top at all-time high. We came back, and I think we were actually doing the video at that day. I was talking about this in the crypto market mentor community. There's your golden pocket retracement, very
Mhm.
healthy back test, very nice. You basically got a morning star candlestick here on the 4 hour, and then we started to trend back up. And now, and of course, it's a trend until it ends. Ride the trend until it ends. This
Mhm.
ADMA here, we're kind of just been consolidating over it since November 11th. So we're just 8 days away from that. You can see we haven't really pushed away from this zone very much because when we got up here and we had the ADMA a little bit further down in here, we've gone sideways essentially and allowed it to catch up. So we might look at something that just does this, right? We might look at something like General Electric, what it did on its big run. We might look at something like this along the way. So until Bitcoin loses that daily ADMA, I'm not really too concerned about it. So I wouldn't be overly concerned about MicroStrategy as well. Because if
Mhm.
MicroStrategy is going to be following not on par one for one what BTC does, but if the overall trend of BTC is still trending higher, we're going to assume it's going to trend higher. MicroStrategy is going to trend higher. It's what's happening in Netflix right now. Look at the daily ADMA. It gave you an example in here, right? So I wouldn't be a seller of Netflix right now until it loses the daily ADMA. Look what's happening in Carnival Cruise. Hey, you want to go on a cruise right now? It's starting to get a little bit exciting, right?
Mhm.
It's constantly holding daily ADMA. So again, for that type of a trade, until Bitcoin loses the daily ADMA, forget about everyone's like, okay, 100,000. It might blow past 100,000. It might be, if this move could go much higher, or we're not going to get to 100,000 right now because everyone's
Right.
assuming 100,000. The market likes to look at a different direction when everyone's looking one way. But right now, I would ignore the noise, ignore people's thoughts and opinions on something like this. I would say, look at the daily ADMA. Is it holding that trend? It's got some great examples in the past of seeing very extended moves holding the daily ADMA, and that's what's happening right now, especially after a multi-month base that we've seen in here. I think
Mhm.
maybe Did Costco do something like this? Yeah, Costco did it right in here
Hmm.
after its breakout. I did it a couple times. So that's what I would watch. Um,
So
you know,
you just made this with respect to a key thing. You just made this really easy for people.
yeah.
Instead of focusing on all the noise and oh, the RSI, the
Mhm.
stochastics, the MACD, volume, even this kind of thing, just look at the 8-day EMA and is it still holding up?
So whatever you guys are trading, the trend that it's currently on, if it's trend, and I don't mean a trend that, yeah, it's going higher, but it's, basically slightly, some days up, I'm looking at something that's strong, a very strong trend that there's a lot of attention on because the momentum is significant. You want to relate it to the ADMA. Okay, you want to relate it to, is it constantly trading over? Is it constantly popping off of it on the time frame that you're trading? So it could happen on, let's go look at, and I haven't looked at this today, but let's go look at MicroStrategy today. And I'm just going to go to the 5 minute ADMA. Okay. So not that strong, but you could see, it's not, starting to lose it right now. So, the 15 minutes been pretty solid. You can relate all of this to the time frame that you're focused on. So if you have an intraday momentum chart, like Rocket Lab right now, okay, Rocket Lab looks like the 5 minutes holding really good. Yeah, 5 minutes holding really good right in there. It would be something that's on the move. Okay, SMCI, no, that happened in the pre-market. That happened in the pre-market, yeah. So if you're also trading an option that's expiring this week, or you trade, you're a very aggressive trader that likes to trade daily options and something's moving intraday, you really want to focus on the short-term time frame ADMA as well, because that's how you can make, very strong gains in a very short time frame. But the most important are the dailies, right? That's the most important is the daily. You need to be trending. This is if you're bearish in here on SMCI, that's beautiful. You want to flip this chart upside down, right? You want that if you're bullish. You want to be looking in the other direction. So you can use it on any time frame as well. What'll happen is on those short-term time frames, when you have a very strong run, let me see, AI is up 16% today. Oh, this will be a good one. All right,
Hmm.
here we go. So this was happening earlier today. Yeah, 2 minute ADMA. Lost it. We got some bearish divergence in here, so we start to correct a little bit. You can use this all in the short-term time frame as well. Once you lose your EMAs on the time frame that you're watching, the ADMA, you want to look to the next time frame. So I just showed you an example of it lost a 5. But does that mean it's time to sell? Well, look at the bear volume when it lost the 5. Not very significant. So I started looking for the 15-minute ADMA to be my next hold. And now it's shaping up a bull flag. So if you're riding momentum and your current momentum is lost, look for the signals. Is the volume significant? Ooh, okay, that's a hard sell. Is it no? That's very casual. So I'm thinking now on AI bull flag shaping up on the 15
Hmm.
minute time frame, and I look at that 15-minute ADMA, which is holding. So that's just a little thought process around those ADMAs and holding momentum. So this morning we had the Ukraine, Russia nuclear weapons, Ukraine long missiles, and the market was getting very anxious in here. And we saw some escalating volume, and then we saw a bullish reversal hammer followed by a bullish kicker. So looking for confirmation in candlesticks that things are going to be a reversal signal, looking for confirmation. If you get a shooting star candlestick, you should be looking for a bearish kicker next. That's confirming that sell pressure. You get a bullish reversal hammer candlestick, you should be looking for a bullish kicker next. That's confirming the buy pressure. That's what happened this morning, and the market reversed. And now, oh, okay, are we back up? The VIX started to sell as well. Look at the EMA here on the market, 5 minute ADMA. Look at the 2 minute ADMA here on the market. So if you were trading a daily option, this is how you could, make some gains using those very short time frames. Um, yeah, so I mean, let's just talk about a few things here. I'm going to share some charts and share some things that I'm looking at. And if anybody has any questions, feel free to just type it in, and Dan, interject if you'd like at any point. I'm just
Yeah.
quickly, I know we've already been talking for 40 minutes. I'm going to just quickly talk about the trend that we are in. So we had the Trump move on the election, and if you guys remember what I talked about, you have to consolidate every move. Every move eventually it needs to consolidate. And then we could establish if that trend is over or are we just looking for it to build up a new support. So again, we had our demand zone, which created our support. We had our resistance zone, our supply zone. We had a breakout. We always have to think back test, right? We always want to look for a back test. So should we be concerned last week? It's a double-edged sword. No, I'm just looking for a back test. Oh, it gave back too much money. So again, you want to be protective of your gains. You may have sold last Friday on the monthly OPEX. OPEX days could be crazy in both direction, bullish and bearish. We saw sell pressure on last Friday, so it did scare some people out of the market. You always have to think about when the market is escalating, whether it's to the upside or to the downside. Are they trying to get to a zone? Are they trying to shake out? Are they trying to find where the buyers are? We just had no buyers. We had no buyers last Friday, Thursday, Friday, until we saw a backtest of this range. So is the market in trouble right now? Like I said, we have to protect our higher lows. So if you did stop out on some trades and you're thinking about buying back in now, but your chart is trading higher, that's okay, because if you have a comfort level of where the market is, buy back in higher, because now you see the market's trying to establish a support. So what we're seeing right now is a back test of this range. Today, we are still showing a good sign that the market's not breaking through. We fell and we were immediately bought up. That's a good sign. You could see the algo buy pressure that came on here. So the algo is turned on and they defended that zone. So I really like the back test that we're currently seeing off of this range. Also, last week, the pressure was caused mainly from the NASDAQ. I think banks were still up on Friday. Things weren't looking that bad as the NASDAQ. NASDAQ was looking pretty bad, but I noticed that the NASDAQ was escalating right in here into the platinum zone, and then we immediately reversed. So what happened today, if you look at what happened today, we bounced off of the platinum zone. We struggled. We had a bear flag in here. You could say that this is your pull to the downside here. My magnet, I don't know why I just did that. And then we had a bear flag, right? So we saw a bear break on the bear flag, but we had some bullish divergence. So when we made that new low, right in here, we made a new low, but the RSI did not make a new low. So again, I'm looking at this and, I have a lot of positions on and, I don't want to really give back, but, did the market just hit a top? I'm not sure, but it's still not giving me a reason to sell. It's giving me reasons to be protective, maybe raise some cash in some positions that really weren't working too well, and maybe their zones did not hold. So, of course, you're going to stop out of some positions. But overall, I look at the market. Okay, we got bullish divergence. We have our platinum zone in here. We are just looking for a higher low. We needed to consolidate the Trump move. That's our Trump move. We need to consolidate that move. I would be concerned now, if we don't hold this range, and of course we lose our support, then I'll say our trend has changed. Now we're going to be looking for downside. But we haven't seen that. Instead, what we're seeing is the market consolidate the Trump move. Very healthy so far, even though it didn't look healthy. So we had no supports along the way. Now, great. So if I was a seller and I'm thinking, uh-oh, market's going up, I'm seeing a zone that looks like it's holding, it's establishing, then I would be like, okay, I can buy back in higher, or I can look for new trades. So until the market loses its support, all we're doing is establishing a new support. And I do think we have opportunity now to see a run back up into this upper trend line. 1, 2, and look for a third touch. And I'm not overly concerned about upper trend lines unless we're in a downward spiral. So I just want to clarify that for people. So if we're in a downward spiral, the upper trend line is my concern because it's the bear trade until that trade ends, right? But if we were to flip this upside down, we could constantly be rejecting that upper trend line, but just pushing up higher because we also have a lower trend line that's establishing these higher lows of support. So even though we hit that upper trend line and we sell, doesn't mean the trend is over. So from this perspective right now, I do think we have opportunity to get to that 6187 range or potentially a little bit higher. NQ as well. I think we could get to 21,729. So that's what I'm looking for, as long as we could hold here now in the next couple of days. Also, just looking around and looking at are things moving, are names moving? Yes. Are things starting to break? I talked about AI on last week's video where I was looking for this golden pocket finally to break. We're seeing that today. That's a good sign. So smaller names starting to get money coming into them, starting to see breakouts. Good sign. So this is a trade everyone should watch, but let me just go in order in here. BTC, just to recap really quickly, we want to hold this daily ADMA. If we were to close here today or higher, that would be our all-time highest close. That's a good sign, especially after a couple of weeks of consolidate, 8, 9 days of consolidation, that we get our highest close. Really good sign. Not seeing any sell pressure, really good sign. Trading over the daily ADMA. Right now for the Russell, again, a Trump trade that was absolutely consolidated in these past few days. And I hadn't drawn this, but let me just go see where. Yeah. Okay. So golden pocket platinum zone bounce. But also the other good thing here is the breakout way. We have our resistance, resistance, resistance. Let me clean that up for you. So we have our, oh, I have the scary color candle. Let me just fix this up. And so we have our resistance, a resistance, a resistance, a resistance, breakout. That's our breakout candlestick. If you watch the previous videos that I talked about, this is the candle we now need to hold because that's a breakout candlestick. We see we're coming down to the bottom of it. It looks like at the moment, we're shaping up a bullish reversal hammer in the backtest zone. That's great. It's also the platinum zone. That's great. So what I would look for now, as long as we can confirm this tomorrow, every candlestick, every pattern needs confirmation. We would get a bullish kicker candlestick tomorrow. I would look for the lower high, then the higher low. And if you want to get in at that point, if you're playing IWM options or you're playing TNA, then you have your stop loss and your breakout. So you can either make the entry off of using your stop loss as I'm trying to catch that higher low, or you play the breakout of the trade. So that's what I'd be looking for on the Russell right now. Let me move on and talk about some trades that are pretty interesting. Tesla, this is my biggest position. This is my biggest long. I've made some mistakes along the way of this trade, but finally really starting to work out. I think we are going to make a new all-time high now, but first target zone, I'm going to look at 414, and then I'm going to look at 503. So just from a weekly perspective, I do want to point this out to you. I do have a minor concern because I do have a target rate in here at that 350, which last week's candle hit and then closed below. So for peace of mind for me, I want to see us close above 350, 351. That'll give me the indication that yes, we'll push up to new all-time high and then 503. This short-term pattern in here. So we had the consolidation after this was the earnings move. So we had the consolidation trend line. We broke out nicely. We saw a similar pattern happening in here. Again, we're breaking out, but I do think this is possibility that we might have to set up some form of a triangle in here. So this could drag out. The longer it drags out into a triangle, the technically better it's going to be for the move. So the more time consolidation, the more buyers, the more accumulation, the higher the move I'm going to anticipate. But if it wants to push up from here, immediately I would target into a 404 range. I think Meta is something to watch right now. We have basically a quad top. From a weekly perspective, I'm still thinking not bad if we could reverse above the 555 range. It could still give us a bull flag, but right now, because we had this 1, 2, 3 top breakout, 4 top, that we could just be coming for a back test in here. So I would want everybody to be observant of Meta reaction in the next day or two. Maybe it needs to come back and back test this zone fully. But right now, I do think this is going to end up giving us another push back to this upside. It could a lot of these names could be dependent on, is NVDA's earnings a market mover? Is it a non-reaction move? Or is it going to push us to the upside? So NVDA tomorrow after hours is going to be a factor. Apple, this is very interesting right now. And I do think it's signaling we're going for a breakout because we had our higher low, and we established 1, 2, 3, 4, 5 days of support in this range. So even if it doesn't work out, it's a very clear stop range until we get back down to 214. Okay, so I do like this zone in here holding. I do like seeing yesterday's higher open, seeing the push, today's lower open, seeing the push. So I do think we're going to have opportunity for a breakout. So Apple,
Mm,
right now, very tight these past few months. I think there's opportunity in Apple. AI, I talked about last week. This looks like it's the breakout. So we got a bullish candlestick. We have the volume, everything's to support it. So the bottom of this candlestick will now be my stop loss. TGT, I do want to point this out to traders that are not aware. So if you're looking for an option trade, I would target into this 175, 180 range. This definitely looks like a nice inverse head and shoulders. If you look at what Walmart's doing, right? I think there's going to be some opportunity here for a catch-up trade. I talked about copycat patterns in the market, so I think I'll get to that really quickly. I do think we're going to see something explosive in TGT. AMD, this is the dog of the market from the high flyers recently, but I've seen this over and over and over, and it's happening on a big scale right now. And I love this zone being back tested. So right now, I do think it's a low risk, high reward opportunity. If I'm going too fast, please guys tell me. But
doing good.
yeah, just going through everyone's time. I think there's a huge trade shaping up in Airbnb. So, inverse head and shoulders do not need to be perfectly symmetrical, right? It doesn't need to be, oh, they can be slanted, they can be a little bit wonky. The only thing is you don't want your right shoulder to be over your left shoulder. So, sometimes I'll see somebody say, here's your inverse head and shoulders. Well, here's your right shoulder. But if this has already gone over this zone, then you've already reversed the trend to the upside. We're looking for a reversal pattern. So we're looking for something along these lines. I think this is what we're watching in here in Airbnb. So I would look at that shoulder being established there. Okay, I should have just redrawn this, but right in here. And I think now what we're doing is we're establishing this shoulder right in here. And we're going to get this dip bought somewhere above 121, and then that's going to be the long entry. So I think what we're watching here is our first move has completed off of this bottom. We are consolidating our second move, and we're going to go for a huge third move. So I do think you should keep your eyes on Airbnb. Okay.
Mhm.
SMCI, obviously a very high risk, high reward opportunity, but we got three white soldiers coming off of the bottom right now. So we gap down, we dojied, we inside bar, we bull kickered. We're seeing another bull kicker. Sentiment starting to change. They've trying to clean the books. They hired a new auditor. They submitted their form to stay on the NASDAQ. I'm thinking about this as small amount, potential high reward, major support zone from all of 2023, new low, no follow through, three white soldiers off of the bottom. This is potentially a huge trade in the makings. But of course, if you were to want to manage your risk due to fundamentals, you just keep the percentage, you keep the dollar amount pretty low. Etsy is
Hey, Rick,
not.
I got a question for you on SMCI. From an options standpoint, is that one because it's up quite a bit? If you call 34% up a lot, but would you, from an option standpoint, would that be something that you'd sell puts on right around that established support zone that you were talking about?
Yeah, I think that would be an absolute great idea.
Yeah.
Yeah, I
Okay.
think that
Yeah,
would be
that's
a great idea. So what'll happen though here is the three white soldiers, it's going to top.
right.
It's going to top. Maybe a gaps up one more time tomorrow, and then you're going to see this, right? So that trade maybe doesn't work out at that time, but then you're going to see this,
Mm,
right? So from a bull perspective, obviously you would be paying a high premium to buy a bull bet right now if you're not.
right.
I would wait for this because then we're going to look for traders to recognize a pattern in the market,
Hmm.
and then they're going to come in. So be prepared if you do take a trade like that now that we're still going to have to pull back. This shouldn't be a straight line move.
Okay.
It
So
could
what
be,
you're talking about is the best entry or none at all.
yeah, yeah.
Fair enough. Yeah.
Etsy guys. So I'll get to the copycat patterns, but I talked to you about Etsy a couple of weeks ago or last week. It's the same pattern as AI. AI is getting the break. Etsy is just a little bit weaker because it's trading at 52-week lows. But major zone of support off of COVID. I do think there's a breakout happening in Etsy soon, so keep your eyes on it. If you wanted to play something a little bit less risk on NVDA earnings in terms of the returns, if NVDA has a good earnings, I think Broadcom is going to see
Hmm.
advantage in here off of that, and I would target back up into the breakout zone 183. So I do think this higher low dip is going to be bought on Broadcom. So great opportunity shaping up. Masters on an 80 MA run. Netflix is on an 80 MA run. CCCL is on an 80 MA run. Amazon, this is the back test. So this might be the best price you ever get on Amazon again. So keep that in mind. But it's giving you a backtest candle, so it's giving you a very clear range to say, well, if that didn't work out, it's great. I could look at the next zone. So I do love what we're seeing in here. This is a piercing pattern candlestick, which is identical to a dark cloud cover, but from a bull perspective, if it's capturing 50% of the previous candlestick after the gap down, or it's going to be a bullish engulfing candlestick. So this is going to be a really good looking candlestick on Amazon today. So you want to keep that in mind. Here's a trade everyone should watch. Ford, we've been basing, so we dropped pretty hard on earnings after a big run. And this happened back in July. So if you think about the range that's been built up in here since July, huge range, and now we have opportunity for breakout, and there is a lot of runway. There's a lot of runway in here. Microsoft right now, this is on the zone trading, so I like to think about low risk opportunities. You got your support established in here. So I'm looking for a reversal to shape up in Microsoft very soon. This looks like it's going to go for a breakout. You know, you could argue
Hmm.
as well that this is a inverse head and shoulders happening in here. What I do like is after the three black rows in here, you get the gap down, lower wick, followed by higher open bull kicker candlestick, followed by a lower open continuous buying pressure again. This is telling me buyers are coming in. And on a chart like this, I would then look for the 80 MA run. That's
Hmm.
what I would look for. So as long as we don't see a red flag candle in the next 2 to 3 days, meaning it was shot down, dark cloud cover, bearish engulfing candlestick, huge sell volume. If we start to see this starting to just trickle, I think we're gonna have that opportunity for ADMA run. I'm going to wrap it up with the patterns that I talked about that are very similar in the market. So you want to be able to recognize them. That way you can catch them when they go for their run. That happened in Palantir. Palantir was the big one. It started its major base, and then the breakout. And that's why I talked about coin going to do the same thing, major base, and then the breakout. So I do think coin is going to continue to go. We are watching it in SoFi happening in now. I talked to you guys about it happening in Rocket Lab. So it's happened. Rocket Lab's seen a huge move now for Rocket Lab, very important daily ADMA.
Hmm.
It's happening in Bros. So this is one to keep in mind, guys. Bros is a coffee company. It IPO during the peak of the bull market before we went into the bear market. I'm seeing a huge base. It's the exact same pattern, and it's starting its move based off of last week's earnings. Daily ADMA would be the focus in here. AFRM is doing it. I imagine we're going to go much higher in AFRM. So keep that in mind. If you're looking for entries, there was one a couple of days ago off of the daily EMA. Again, this is the candlestick that we must hold. That's looking pretty good. And it's happening in Upstart. And I do imagine we're going to see a big move here in Upstart. So again, if you look at it from this daily ADMA is not so great anymore because we pushed so far from it, but it looks like we're basing. So what I would anticipate in this one instead is some form of a triangle pattern, which means we'll fall below the daily ADMA. But if it does see a bull kicker tomorrow, we continue to hold the daily ADMA. It's the same pattern. They're all across the board here. Those are just some examples. I do think we're going to see much higher prices in these names.
Hmm.
So that's everything that I wanted to
Hey,
talk about today. I do see there was a question, but Dan, you
yeah,
were something.
yeah, about Exxon and Chevron.
So let me just see.
Not on your list.
Yeah, but I do want to check. Where is okay? So U.S. oil. I haven't looked at oil in quite a bit here. Okay, so still in a downtrend, but it does have its major supports. So let me see what Chevron is doing. Support broke, held. Daily 80 MA at the moment, trading up high after earnings. Let me see this on a weekly chart. That's a really strong entry in here. Like you look at this area of resistance, resistance, resistance breakout. Look at the back test there. So this is a classic trade that I would love. You know, I just don't focus in this space in terms of oil, but that back test in here, that was a great entry. You're currently seeing this zone of resistance right now on the weekly chart. So let's go look at what that looks like. Oops. This zone right in here. So we created this supply zone right there, and we've rejected it a few times. So we have our zone of support, and we're trending back towards this. So if you're drawing a trend line from the top in here, that would look like it's about to confirm its breakout. So you say, well, we had a top in here, we have a top. If you used it from this range, you would say, well, that was pretty messy. So you want to look at it from there now. I would target into this range. What I do like is it's trending with the daily 80 MA. I do like the lower wicks. So you see the drop, push, bullish kicker. You get an evening star, but it just comes back to daily 80 MA and holds. So it's trending at the moment. You're looking at this major zone. So that's where I would have my target at the moment. My target would be between 167 and 172. The overall chart right now off of that major support is absolutely beautiful. You can see the support right in here. Establish. That's a really nice support. Nice higher low. Your support is down at 147. Your higher low is at 154. So the trend's looking really good right now on Chevron CVX. Volume, no major concerns. Getting paid a dividend today. Everything's looking good there up into that major resistance zone. XOM. So it looks like we had an ABC correction in here. So right there. Okay, see this, oh, what is this? This is an earnings candlestick. So it gapped up and then it pushed down. Let's go look at that candlestick right there on earnings. So push down, yeah. Let me see here, 110 to 126. Let me make this visible on the daily. It's already there. Yeah, it gapped below. So I guess it came into the golden pocket off of the bottom. That's what it did right there. See that little wick right into there, into the golden pocket. So this is very typical after a big move that you would see a retracement in an ABC correction form. And that's what I would look at right there. And it came into the golden pocket and then it was bought up. Then you had an inside bar. So this candlestick right in here led to this push up. We're pulling back, but as long as we stay above that 116, that's very healthy. You could look at this as an opportunity right now to anticipate the breakout. I would not want to fall below this golden pocket now, which would be above 117.52, 118. I would not want to fall below it. It's not trending as nice as Chevron because you can see CVX was trading with the daily 80 MA, but this one also hasn't shown a major red flag as of yet. We had a new, I guess that was a new all-time high that didn't get fall through. But again, we've held the higher lows. CVX short-term pattern looks a lot better, but this pattern is still intact. Higher low, higher low, higher low, not losing its golden pockets. It's not trending as nicely, but it's still looking pretty strong. Thoughts on Oracle?
Yeah.
So this is one I haven't looked at. Okay, this is a weekly 80 MA run right now. So you can see the break on the weekly and then the bounce off of the weekly. You're trading at all-time highs. So it's a blue sky chart holding the weekly 80 MA. Everything's looking good on this chart, right? I would say your only red flag is going to be once we fall below 178. You don't fall below 178. That was your previous area of consolidation. You found a higher low. You're trending up a little bit higher now. Of course, you got to remember when you're getting into moves like this, if you're just getting in now, you could be late to the move. You're that far away from the weekly 80 MA. So anybody that bought it, it's all-time highs. It's great. You bought it last week, you're down, right? So you got to remember where you are in the move. So you don't have a support. Your support is down at the 167 range. So if you're getting into the trade now and you use 182, this candlestick as a stop loss, remember that's just you trying to play off of the higher low. It's not a support. So if that 182 is lost, it doesn't mean anything. It just means you're consolidating this current move, which might mean you're in an ABC correction, which means you saw your A, you're in your B right now. You're going to come back down to your C. You're going to have your low. You're going to find your higher low, and then you can continue higher.
Mhm.
So don't just assume, if this candlestick is lost, it's a red flag. It's not. You would just be in the correction. It would be a red flag to me if you can't hold the 178 back test.
Mhm.
Thoughts on the Mara move today? So all of these miners have been very weak in terms of where they are in the overall trend, but in terms of where we are in a pattern, I still really like it. We saw a golden pocket rejection followed by double topping at that golden pocket rejection. What we've done here is very nice in terms of the back test. So yesterday's candlestick is a sign that we should gap down and we should continue to see pressure to the downside. Instead, today we're squeezing back up because we saw a higher open. So anybody that's trying to catch the short continuation, they overstayed their welcome. They overstaying, they're being too greedy to the downside and they're getting squeezed out today. So this is a good sign for now. But all we're doing right now is zone to zone trading. So because we're establishing a new higher low above these zones in here, it's not that strong. I'm going to anticipate a lower high. So if I looked at this 4-hour chart, I would look for a 4-hour retracement of this consolidation. So we have this move in here, and we have the potential now to consolidate that move. It doesn't mean we're going to continue to go up. What's going to be important is what happens next on this leg. So right now we can think about the targets of this retracement. And ideally, we would get up to the golden pocket. Let me see exactly where that is. Ideally, let's zoom in a little bit more on that hourly chart. That's where your resistance is. You can see the supply zone created right in there. Short term, there's another supply zone right in here. And we're entering it right now. So I like what we're seeing because whenever you anticipate a gap down or a gap up and the reverse happens, it typically starts to squeeze. They need to cover, and then bulls come in. Bulls have reason to come in. It's a back test. Bears have reason to get out now because, okay, we overstayed our welcome. Golden pocket rejected. We're back in here. Now we need to cover, and I would anticipate we could get into this 2358 range. So we're seeing it all over the place. Like some of the miners are doing the same thing. They're back testing these ranges, and then they're starting to move. But just factor in, we are consolidating this move. We'll come back down and then we'll see, where we're going to come back down from is depending on what happens tomorrow. Everything needs confirmation tomorrow. I like the candlesticks. They're bullish engulfing candlesticks. They're looking great. We're going to need to see some fall through tomorrow. That's what I'm seeing in Mara and some of the other ones. They look the same. They're all doing these back tests. Any other thoughts, comments, or questions?
I think we kind of nailed it unless somebody has any other question. Okay, I think we're good. Rick, you're awesome.
Thanks.
Really appreciate your time here, my friend. They're just a
Thanks for having me.
Oh yeah, you guys obviously like it too. I see those thumbs up. The thing to remember is that on any option trade, frankly, it starts with the chart. I know Tom Sosnoff, he has Tasty Trade, and he's said many times that he doesn't even need a chart. He just trades on probability, trades on math, and all that. And he's a super smart guy. He's a guy that built the Thinkorswim platform and then sold that to TD Ameritrade, who in turn was acquired by Schwab. And so Tom is probably richer than France. And he's just a math head. But here's the thing. He also coaches playing it like a casino. As many people as want to play cards sit down at the table and play. You may win a fortune, but over time, we're going to get you. In trading, for most of us, that doesn't work, where you see any and every trade set up with the math that works for you, which is just probabilities. It's not a sure thing. You could go on a losing streak. First of all, people just don't have the money to do every single trade, but you could also go on a losing streak, and then you have to have the financial wherewithal to just keep going and keep going and keep going until the odds work out. And again, Sosnoff can do that, but I don't know too many people who can. My approach, and I think it's the more common approach, is look at the chart first. If the chart gives you a good setup, then at that point, you put your, and sometimes maybe you're just going to buy the stock, but you put your option strategies to work, and then you can make money on options. As you guys know, I like to do covered strangles. That it's always kind of worked for me because I actually grew into the business selling or buying covered stock, covered calls. But what I found was I'm always great stock picker, but then I've capped my gains. So with straddles or strangles where you sell a put as well as a call, you kind of get double your money. But that's for another conversation. A lot of you guys know that strategy, but for now, at least on, I mean, on the stocks that Rick, on the stocks that you were covering, it's kind of like just let the blue sky play out, you know? So, anyway, okay, guys, I think we're good. Oh, Randall, how would you play NVIDIA this week? I'll tell you I'll tell you for me, I think NVIDIA has such potential explosion one way or the other. I would just be really concerned about opening a position on NVIDIA unless it was absolutely funny money. That's just the way I look at it. I think that there's going to be plenty of money to be made after earnings if you know what you're doing to trade options that way. But I just have seen the options market be wrong with respect to implied moves on these big stocks like that. So, you know, unless you've got something else on that, Rick.
Nope. Nope.
Okay.
Nothing else.
Yeah, I just think that's the best way. So, okay, guys, thanks for being here. Really appreciate it. Rick, thank you so much. We're definitely going to be seeing more of you. So,
Thanks,
yeah,
guys.
everybody give Rick a round of applause. Oh, and a heart in there. Nice, nice. All right, buddy. I'll talk to you later.